Autonomous AI agents can now orchestrate complex cyber attacks in seconds, drastically outpacing human defenders. While AI-assisted breaches happen in minutes, the average human security team still takes weeks to detect and contain threats. This speed gap is the real crisis, and it's why AI-powered defense isn't optional anymore. This isn't science fiction, it's the new reality. AI-powered cyber attacks have exploded by 500% in cloud environments, while businesses now generate 400 exabytes of data daily. That's 400 billion gigabytes of exposed targets. Here's what Wall Street is missing. The only defense against AI attacks is AI defense, and that's creating a once-in-a-decade investment opportunity. Today, I'm breaking down 5 cybersecurity stocks positioned to dominate this $200 billion AI security market by 2030. We'll cover their specific AI advantages, financial strength, and exact investment thesis for each. By the end, you'll have a complete blueprint for positioning your portfolio in what I'm calling the Cybersecurity-AI Convergence. Let's dive in. First up is Palo Alto Networks, ticker PANW, the undisputed leader in security platformization. Here's why that matters. Enterprises are drowning in security tools. The average company uses 45 different cybersecurity products. PANW's strategy is to consolidate all of that into 3 unified AI-powered platforms: Strata for networks, Prisma for cloud, and Cortex for security operations. Their secret weapon is Charlotte AI, embedded across all 3 platforms. Charlotte doesn't just detect threats, it automates the entire response workflow. The results are staggering: 98% reduction in security workload and response times, 50 times faster than traditional systems. The investment thesis? Platform consolidation is unstoppable. Once an enterprise commits to PANW's ecosystem, they rarely leave. That's proven by their 120% net retention rate, meaning existing customers are spending 20% more each year. Financially, PANW generates over $8 billion in annual revenue with strong recurring revenue streams. They're the safe, large-cap choice for investors who want exposure to AI security without excessive risk. The risk? Premium valuation at 15x forward sales. You're paying for quality and market leadership here. Bottom line, PANW is the comprehensive security choice for large enterprises building AI infrastructure. If you want one stock in this space, this is your blue chip option. Stock number 2, CrowdStrike, ticker CRW, the cloud-native disruptor. CrowdStrike defines itself as the AI-first cybersecurity company, and they've got the architecture to prove it. Unlike legacy security vendors that bolted AI onto old systems, CrowdStrike built their Falcon platform cloud-native from day one. This isn't a minor technical detail, it's a massive structural advantage. Here's why. Their cloud-native design means the AI learns from every single endpoint, cloud workload, and identity across their entire customer base simultaneously. It's like having a security system that gets smarter every time anyone, anywhere gets attacked. They've weaponized this with 29 AI-enhanced modules covering endpoint, cloud, and identity security. The platform processes over 2 trillion events per week. The investment thesis? CrowdStrike's subscription model is a cash generation machine. They post 95% subscription revenue with annual recurring revenue now exceeding $4 billion. And here's the kicker. Management is targeting $10 billion in ARR by 2031, demonstrating massive long-term growth potential. Financially, best-in-class Rule of 40 scores, combining revenue growth and profitability. This is execution at the highest level. The risk? The July 2024 outage raised questions about operational stability, but their recovery and customer retention prove the platform's stickiness. CrowdStrike is the aggressive growth play in this group. If you believe in cloud-native disruption, this is your pick.
Stock number 3, SentinelOne, ticker S, and this might be the most undervalued opportunity on this entire list. SentinelOne is what I call the AI-native security platform. While other companies added AI to existing systems, SentinelOne was architected from day one around artificial intelligence. Their entire philosophy is fighting machine with machine, using AI to combat AI-powered threats. Here's what makes them special. Their Singularity platform uses three distinct types of AI working together. Static AI analyzes files in milliseconds. Behavioral AI monitors processes in real time. And streaming AI correlates anomalies across your entire environment. It's autonomous threat prevention, detection, and response without human intervention. They've also launched something called Purple AI, a generative security agent that does advanced threat hunting using natural language. Think ChatGPT, but specifically trained to hunt for sophisticated attacks in your environment. Now here's where it gets really interesting, the valuation. SentinelOne is trading at just over 5 times forward sales. Compare that to the peer group average of 14 times. Despite having AI capabilities that rival or exceed competitors, the market is giving you a massive discount. The investment thesis. SentinelOne just crossed $1 billion in annual recurring revenue, with over 26% growth. They're growing faster than the market is giving them credit for, with analysts seeing 36% upside to their price targets, around $23. Financially, they nearly have $800 million in net cash on the balance sheet, no debt. They're meeting Wall Street expectations consistently. Revenue growth is running over 21%, and they're expanding into AI-native SIEM capabilities. That's security information and event management, which opens up a whole new market opportunity. Here's what I love about this setup. You're getting a pure-play AI security company with legitimate technical differentiation, solid financials, and strong growth, all trading at a significant discount because the market hasn't fully recognized their positioning yet. The risk. SentinelOne is smaller than CrowdStrike and Palo Alto with a market cap under $10 billion. They compete directly with CrowdStrike in endpoint security, which means they need to continue proving their AI advantage translates to market share gains. The stock can be volatile. But here's the bottom line. If you're looking for the best value proposition in AI security right now, SentinelOne offers true AI-native technology at a discount valuation. This is the emerging challenger with the potential to deliver outsized returns as the market recognizes their AI capabilities. Quick recap before we continue. PANW, the established platform leader, large cap, stable, premium valuation. CRWD, the cloud-native disruptor, high growth, proven execution. S, the AI-native opportunity, undervalued, strong growth, technical differentiation. Now let's look at the infrastructure plays. Before we continue, if you're finding this analysis valuable, hit that like button and subscribe for more deep dives on the trends reshaping the market. Trust me, you'll want to catch the next one. Stock number 4, Zscaler, or Z-S, the Zero Trust leader. Zscaler represents a fundamental shift in security philosophy called Zero Trust. Traditional security assumed everything inside your network was safe. That's dead. Zero Trust assumes nothing is safe. Every user, device, and AI workload must be verified continuously, regardless of location. This isn't optional anymore. With remote work, cloud infrastructure, and AI agents operating everywhere, the old castle and moat security model is obsolete. Zscaler's advantage, their cloud-native Zero Trust exchange, processes over 500 billion transactions daily. That massive scale gives their AI unprecedented training data. It's learning from more attacks than any competitor. The investment thesis, Zero Trust is becoming the default architecture for enterprises. Zscaler has first-mover advantage and the largest deployment base. Financially, strong 28% free cash flow margins with consistent revenue growth. They're also expanding into specialized verticals like healthcare and IoT security, diversifying revenue streams. The risk? Competition is intensifying as every security vendor adds Zero Trust capabilities. Zscaler is the infrastructure backbone play. If you believe Zero Trust becomes the security standard, and I do, ZS is how you capture that trend. Now stock number 5, Fortinet, FTNT, the value opportunity. This one's controversial because the stock has underperformed recently, but that's exactly why it's on this list. Fortinet is the deep value play with serious AI credentials. They've embedded 40 AI technology across their entire security fabric platform and hold over 500 AI-related patents. This isn't a company playing catch-up. They've been investing in AI for years. What makes FTNT different? They offer the most comprehensive security portfolio of any vendor. Networking, endpoint, cloud, email, everything. And they do it profitably. The numbers: 33% operating margins, among the highest in the industry. They're sitting on $3.47 billion in net cash with zero debt. This is a fortress balance sheet. The investment thesis: the market has overcorrected on near-term concerns, creating a value entry point for a fundamentally strong company with deep AI investment. Financially, trading at a discount to peers despite superior profitability metrics. For value-focused investors, this is your opportunity. The risk: recent billings growth deceleration raised concerns about demand. Management is addressing this, but it requires monitoring. Fortinet is the contrarian play. If you're comfortable with near-term uncertainty for long-term value, FTNT offers the best risk-reward balance in the group. Here's the bottom line: AI security isn't a maybe, it's an inevitability. Every AI model, every AI agent, every AI-driven process creates new attack surfaces. The cybercrime economy is projected to cost $10.5 trillion annually by 2025. Enterprises have no choice but to spend massively on AI-powered defense. These 5 stocks aren't just positioned for this trend, they're defining it. Yes, valuations are elevated for some. Yes, competition is fierce. But the AI security imperative is a structural, decade-long growth trend that will reshape enterprise spending. The question isn't whether this market will explode, it's whether you'll be positioned before the market fully prices it in. These 5 stocks are your blueprint. Now execute. Drop a comment below. Which stock resonates most with your investment strategy? Are you going conservative with PANW? Aggressive with CRWD, value hunting with S, or contrarian with FTNT? I read every comment. Thanks for watching, and I'll see you in the next one.